Alrighty, time for our Fiscal Focus segment brought to you by InfoChoice, your choice of information on Australian consumer finance. Now, we're at that point in the year where we start to turn our attention to what's to come. So, for example, in the finance world, many of us will be wondering what's going to happen to, say, the property market in 2024. Well, Domain has released some of its forecasts for 2024, and joining us to talk through it all is Domain's Chief of Research and Economics, Dr. Nicola Powell. G'day, Nicola. Welcome to the Savings Tip Jar.
Hi, thanks so much for having me on.
Thanks for joining us, Nicola. So just straight off the bat, what is Domain forecasting for property prices for next year?
I think that's really what everybody wants to know is what is going to happen to the property market next year. And what we are forecasting is largely an increase in property price Australia-wide into the regional markets as well as across our major capitals. What we are forecasting is stronger rates of growth across the capitals relative to what we're seeing in the regional markets. And obviously there's diversity as well between property types and also between the different capital cities. So we're actually expecting Sydney houses to lead price growth next year. So we've forecast a between 7 to 9% increase in house prices. But there's other capital cities that are very close to that. So Brisbane and Adelaide, we've got a forecast between 7 and 8%, and even Perth, 6 to 7% for house prices next year. Slightly lower rates of growth for the unit sector. Our best performing, what we're predicting is the best performing capital city for units is going to be Brisbane, which may come as a surprise to many people because you've got to remember that Brisbane prior to this year had higher levels of unit development. And we've got record high pricing in Brisbane's units, and we're expecting them to continue to grow next year, forecast of 4 to 6% growth.
So, Nicola, as you've touched on, there is quite a difference between what's happening between all the major cities. And at the moment, it looks like there's a clear divergence between the Sydney and Melbourne's where things tend to be perhaps slowing down quite a bit. Whereas, you've got those other major capitals, Perth, Brisbane and Adelaide seeming to head in the other direction. What are the key drivers of those differences there?
Yeah, look, it's really interesting, that comparison between, say, the Sydney and Melbourne market, because we're actually forecasting a much more subdued increase in house and unit prices in Melbourne. So Melbourne, we're forecasting a 2 to 4% increase, where in Sydney is 7 to 9%. And that's actually very unusual because what you tend to find is Melbourne leads price cycles and Sydney follows. And that's not what we've seen over the last 12 months. We're expecting Sydney to still lead the pack in terms of price growth next year. One of the main reasons for the difference in performance is supply levels. So supply in Melbourne is in a much better position overall when you look at total supply in the market compared to Sydney. And, some of our other capital cities, so Brisbane and Perth as examples, and even Adelaide are still grossly undersupplied. And if I was going to pick out any city where supply levels is much better, that is Melbourne. And I think partly because of the ability for Melbourne to sprawl, it's been much better at providing dwellings and also, higher density dwellings in terms of urban infill too.
I've noticed that Domain, perhaps the price forecasts are a bit more bullish than other research houses. So were there any silver bullets that you looked at that said, this is going to be a pretty strong year for growth, particularly in Sydney?
Look, I wouldn't say this is kind of boom time level growth. You've got to remember that this is a forecast for a 12-month period. And actually, I would say that while we are forecasting growth, it's nothing compared to some of the upswings that we have seen unravel in some of our capital cities in previous price cycles. I think there could be some caveats that change our forecast. One of them could be if we do see interest rates being cut towards the latter end of next year, that could be the spark that's needed to provide a stronger boost to pricing. There are lots of unknowns, and forecasting price cycles is a very challenging thing to actually do. But what we use is also the behavioural data. So we plough into our model various different economic statistics, obviously property statistics also, but the consumer behaviour is a really unique part that feeds into our model. And where we've got richer consumer behavioural data, like markets like Sydney, our forecasts are actually more accurate.
Nicola, let's talk a little bit about the rental market at the moment. Now, obviously, we've seen things tighten up considerably over the past year in the rental market, with vacancy rates at pretty much all-time lows in nearly every single capital city. But I noticed in the Domain's forecast that you mentioned it might reach a tipping point, and perhaps that will drive some renters to become property owners. What are your thoughts on that? Like, have you guys got any numbers on how many fed-up renters are actually becoming homeowners at the moment?
Oh, I think there's probably a lot of fed-up renters out there. We've just released our November vacancy rates, and Australia-wide, it's holding at a record low, which is 0.8%. When you look across the different capital cities, you've got extremely challenging conditions in certain cities compared to others. Perth and Adelaide are those examples where the vacancy rate is 0.3%. That is barely any available rental stock. So if you're new to those markets, it is extraordinarily challenging to find an empty lease and secure a roof over your head. And I think those challenging conditions, not only in Perth and Adelaide, but other cities as well, have probably pushed some tenants to fast track their decisions to purchasing. So that might mean that they've had to compromise on their location or their property type in order kind of to meet the budget that they currently have. But I do think that it's the longest continuous stretch of rising asking rents that we've ever seen across our combined capitals. We've got most of our capital cities with record high rental pricing. And that's logical. You would fast track your decision to purchase if you're able to. I think we are forecasting that tipping point for the rental market next year. I think there's a few reasons to the why are we expecting that to occur. We've started to see an increase in the number of people per household. And remember, during the pandemic, it actually dropped. And what that does is it creates an increased demand for the number of homes. Instantly during the pandemic, we needed more homes to house the same amount of people because there was fewer people living in each of the dwellings. We've got that rising. And I think that transition is probably playing out more strongly in the rental market, where it's easier to transition to a share house or, move location, drop a bedroom. And we're seeing that affordability, the stretched affordability play out. Now, that's going to continue to play out next year. But there are many schemes for first home buyers that could help tenants to actually transition to becoming homeowners quicker. We've got the Queensland government that's increased their first home buyer grant. They're doubling it as of the 1st of Jan. You've got the Help to Buy scheme, which should come into fruition sometime next year. It should be in place, which is the shared equity scheme from the government. Both these things are going to help first home buyers. And the shared equity scheme is a national scheme. It's going to help people become first home buyers. And we've passed the peak of record levels of overseas migration into Australia. And most overseas migrants do rent upon arrival. So there's various things there that are going to help ease the demand side of our rental market, which is why we're picking a tipping point sometime next year.
And speaking of first homeowners and potential first home buyers, you kind of mentioned those grants available. The home equity scheme is underway, I suppose, right now, and it is increasing accessibility for those maybe renters. They're providing more incentive for them to maybe get on the property market as a homeowner. But what's your kind of take around these schemes just acting to increase demand rather than actually addressing the fundamental issue of supply? Like, what's your take on that?
Yeah, look, it's very challenging because what you'll probably see is that affordable housing will be supported more so in price, because if you see an increase of demand from first home buyers, all first home buyers are fighting for similar priced properties. They're going towards the lower end of the market. They're going towards the unit sector. And what that does is it basically props up price. And particularly when you've got a financial incentive like doubling of a first home buyer grant, it literally tags on to the purchasing price, is probably the best way I would describe it. What you need to see is demand policies complemented with supply side policies. And we've got the Housing Accord, which is that kind of North Star of 1.2 million homes. And I think, when I walk away from 2023's property market and go to myself, what was my key take home? My key take home was Australia's undersupply was firmly placed into the spotlight. And I actually think that what it creates is more pressure on government to actually deliver that 1.2 million homes over the next 5 years. And we need to make sure that there is a good portion of affordable housing, and they need to be located in areas that people actually want to live.
Similar to that, what you've said just there, Nicola, you guys predict that YIMBYs will replace NIMBYs in 2024. Now, NIMBY is a term, it became much more common colloquialism over 2023. I didn't know about that term until just in the past year. So they're not in my backyard cruise. So obviously there's a lot of talk about increasing supply, but some people are against, having, a 20-story apartment complex in their quiet street. But as I touched on, you guys are forecasting that YIMBY, so the yes in my backyards, will replace NIMBY. So what's driving that?
I think we'll see a much more visionary approach to housing supply, and we've started to see little inklings of it this year. So, for example, the ACT government are now allowing a second dwelling to be built on any parcel of land that is over 800 square metres. So that means if you're in an RZ1, which is, for a single residential dwelling, if you are over 800 square metres, you can now have a second residence that obviously can be separately titled and sold. And so what you've got from the ACT government, I would describe that as quite visionary, because they've changed the territory plan and they're being future thinking around how do we increase the number of homes that we can provide to offer for dwellings. And things like, in Victoria or Melbourne, you've got the granny flat, and don't need to have approval for a granny flat. I think what we'll see next year is greater accountability on local governments to actually deliver and meet those housing targets. I'm not talking about, 20-story apartment blocks in inner suburban locations. I'm talking about things that are missing middle, appropriate housing for the location. So things like townhouses, terraced homes in some of those inner suburban areas, because what we need to be doing is actually planning and building homes for the future needs of Australia and not planning for today or yesterday.
For sure. And that kind of feeds into my next question around property listings. And it's kind of a two-pronged one. So what's Domain seeing with the number of listings just in general capital city markets and in the regions as well? And like off the back of that as well, there's a lot of talk, or there has been a lot of talk about stamp duty this year. And, New South Wales moved away from stamp duty, then moved back to it with the axing of the property tax. How much of a kind of handbrake is stamp duty on the number of listings, and is it potentially hampering listing activity now when there needs to be more listings for home buyers?
I would say probably stamp duty is more of a handbrake on us choosing a home that suits our current needs. What I mean by that is described as a misallocation of housing. So what we do is that we buy a home that we perhaps think that we need in say 5 years' time, because we're eventually planning to have 2 kids. And it means that I think for downsizers, it can be a disincentive to actually move out of the large family home because stamp duty is such an inefficient tax and it adds tens of thousands of dollars to transacting property. If we removed stamp duty, what it would mean, it would make it much easier financially to change homes. And I think what it would encourage is us to right size, buy a home that currently meets the needs that we actually have for housing. From the listings perspective, I think the listings have been such an interesting one to watch over 2023, and it really showcased the behavioural side of our housing market, because you've got to remember there is a huge chunk of people out there that either own their home outright or they have a large chunk of equity within their home. So what that means, if somebody thinks that they're not going to get the price that their home is worth, or there is volatility economically, or we're going through a downturn, what people do is they pull back, they wait. And that's exactly what we saw across our housing market at the end of 2022 and early on in 2023, and that stabilised pricing. Now, it was almost a year or two halves, because then what we saw is sellers regained confidence, and that has actually meant that new listings have been increasing, particularly in some of our major capital cities. And that is now creating an increase in total supply, which means that listings are now coming on quicker than they're being sold. That in itself has actually helped to ease competition between buyers, and that has started to slow down the pace of price growth. So we're still seeing prices rise, but nowhere near to what we were seeing earlier in the year.
Property market forecasting is a very difficult game. We've seen many people left red-faced by that game certainly in recent years. But Nicola, we really appreciate you being bold and upfront with your forecasts. So thanks so much for joining us on the Savings Tip Jar, and really appreciate your insights.
It's been a pleasure. Thanks for having me.
Thanks so much, Nicola.